Hi, I'm João Kwanza. I build financial technology from Angola.
In 2017, the unencrypted financial DNA of 147 million people was stolen from an Equifax server secured by the password admin. Yet the company still generated $3 billion that same year selling the exact data they failed to protect. If your credit score dictates where you sleep, what you drive, and whether you can get a job, why are you the only person in the financial system who isn't allowed to know the actual formula? Three private data brokers quietly pocket $13 billion every single year, selling your financial habits to total strangers. One mathematical algorithm written in 1989 turned human financial trust into an automated surveillance machine. And when an automated database glitch accidentally declares you dead, no human being on Earth has the power to override the system. This is the story of how credit scoring took over society and who really profit from your three-digit number. Consider two parallel applicants sitting in the exact same bank in 2017. Marcus, an engineer with no debt, and David, a small business owner with 30 years of spotless payment. Both applied for the exact same loan on the exact same morning. Marcus walked out with $60,000 at 4% interest. David was escorted out by security because a database in Georgia claimed he died 3 months earlier. To understand how two identical lives diverged in 4 seconds, we have to go back to San Rafael, California in 1956. Engineer Bill Fair and mathematician Earl Isaac didn't invent credit scoring to oppress people. They built it to stop local bank managers from denying mortgages based on skin color, last names, and zip codes. Fair had a naive engineer's faith. He believed an objective algorithm could purge human prejudice from banking. But to feed their predictive math, Fair and Isaac needed massive pools of personal data that no single bank possessed. In 1989, Fair Isaac Corporation licensed their general-purpose FICO score to the 3 dominant credit bureaus. They successfully stripped human bias from loan officers, but to scale it, they handed control to an unregulated surveillance cartel. If you want to understand how these hidden cartels operate today, João Kwanza dissects the plumbing of global finance every week. Headquartered in Atlanta, Equifax started in 1899 as the retail credit company, keeping physical ledger books of citizens who failed to pay a grocery tab. By the 1990s, they had digitized every repayment, bill, and court record in North America. Equifax, Experian, and TransUnion realized they were sitting on gold. They weren't just scoring risk. They were collecting human behavioral futures and selling them to banks via automated software connection. Together, these 3 private brokers generate over $13 billion annually. Look at how their revenue scaled once scoring became mandatory for every mortgage, auto loan, and rental agreement in America. Remember David, whose loan was denied in 4 seconds. A data entry clerk at a credit bureau transposed 2 digits in a social security number, merging David's file with a stranger who died in Ohio. For 4 years, David was locked out of credit cards, apartment leases, and auto insurance. The automated dispute system simply auto-rejected his letters because the database required bureau an employee to manually confirm the death certificate. Who appointed 3 private for-profit data brokers as the Supreme Court of your financial existence? If the math is a universal standard, why do 3 different bureaus give you 3 different scores on the exact same day? In May 2017, hackers exploited a known vulnerability on an Equifax portal. The password to their internal administrative server, holding 147 million files, was literally admin. You would expect a failure of that magnitude to destroy the company. Instead, Equifax stock dropped briefly and then roared to new highs within 2 years. Why? Because you are not their customer. You are their raw product. When I started building financial software and white label trading technology from Angola, I had to integrate credit checking APIs directly into my system. That was when I saw the brutal financial incentive structure firsthand. The credit bureaus charge banks and lenders roughly 30 cents every time they pull your credit file. IMAX. They charge lenders pennies to query your data and then turn around to charge you $29 a month to monitor the score they created about you. The formula remains a black box, not to protect complex mathematics, but to protect the cartel's pricing power. When you build software from scratch in Africa, without institutional backing, you quickly learn that truth and transparency are your only leverage against legacy cartel. My faith in God keeps me disciplined to keep building systems that empower operators rather than trap them. You don't have a credit score. The credit bureaus have a score on you, and you are just the raw material they sell to the highest bidder. Equifax's password was admin, and they built a $3 billion empire on data you never agreed to give them. If you want to understand how the global financial machine actually works, subscribe to Joel Kwanzaa right now.
I'll see you in the next one.